Tesla stock has risen fast in the last couple of weeks and now it's taking a breather. But there are many who are still very bullish despite the run-up. Our guest today, Wang, is predicting Tesla stock at $450 by February 5th. This target is much higher than Tesla's all-time high of $409, which it hit 3 years ago in 2021. And why February 5th? Well, Brian will walk us through the upcoming milestones that he sees will get us to his price target. He'll also list out the key milestones for next year and his price target for end of 2025, $1,000. This is backed by his calculations of earnings, not just a change in narrative. Wang is a futurist thought leader and a popular science blogger with 1 million readers per month. His blog, nextbigfuture.com, is ranked #1 science news blog. It covers many disruptive technologies and trends. Welcome, Brian. Thank you again for joining me.
Great to join you again, Herbert.
Love it when you come. You always have tremendous preparation. You have a lot of deep dive interviews, and that's why I love going to your blog. You always have these write-ups. Whenever I see the write-ups there, I call you and I said, hey, come on, show us what you're thinking. You've had a couple really big hits recently. I think you're knocking out of the park. You were the one that said you noticed that the Giga Shanghai is 2 or 3 times larger than the Lathrop, and now you're predicting Tesla stock. So this is our favorite topic, of course, right now. So walk me through your deck that you put together here.
So this is just saying Tesla stock going to the moon,
Yeah.
So just a little graphic for that.
Going to Mars.
Yeah, the other, going to so go to the next slide. So the federal government has gone from harming Tesla to helping Tesla. So as the most extreme versions of harming versus helping. So the Biden administration was providing the EV credits, but also to plug-in hybrids. So the $7,500 going to Ford, another one that was making hybrids, plug-in hybrids far more competitive. The National Highway Traffic Safety Administration, NHTSA, was doing a lot of things to harass Tesla. This wasn't all federal government, but the NHTSA is federal government, but then the states were slowing down the approval of insurance. So all these things, lawsuits with the Delaware case affecting Elon's pay package, which dropped the stock, was all this big overhang over the stock. And I think at least half of the $100 was $50 of overhang. And then now we flip the other way, where Elon's now the first buddy of Donald Trump. And so the expectation is that regulatory approvals on Tesla bots, on robotaxi, on many other things will be smooth sailing. It won't be like super accelerated, but basically there won't be any unnecessary delays now on the federal government side.
And this is why you come up with $100 valuation, $50 for that, and then $50 for the positive news.
Right.
So that's where we are today.
Right.
And then you came up with this $450 price target by February 5th, 2024. Love the precision there. So through 450, that's going to be higher than the all-time high of 409.
Yeah.
And this is February 5th, which is, November to December, January, February, 2 months.
Just 3 months, yes.
90 days.
90 days,
okay.
Right. So the main thing is that it's passing through year end, where January 2nd, we'll know the volume numbers on the cars and energy, that January 2nd number. And also we'll then have the first earnings January 20th where we'll know things like margin. And then also through the year end, if the stock is very buoyant, so now it's performing better than the NASDAQ, the QQQ. So big funds will want to purchase more Tesla shares and do window dressing at the end of the year. Window dressing is where they may not have been holding Tesla all the way through the year, but now Tesla could be up 390, if it goes up from 330, 390 and not breaking the all-time highs, but it would still be enough that it would have a gain substantially more than the QQQ. So then if it's a hot stock, the funds will want to be shown to be holding it, right? So that would be positive. Also, right now, it's, again, the most active options play. So like 2 million, 3 million options. The vast majority of call options, probably put options, but basically call options, where people are betting on that it's going to keep going up for various time frames, that the call options create a gamma squeeze, where basically the market makers, in order to supply the call options, would then offset and buy the stock in order to not have as much risk. They want to get neutral on that. So there's several institutional things occurring now already with call options, the gamma squeeze, as well as a short squeeze, but not so much of a large short squeeze. And then the institutions need to load up. And then the actual performance of this quarter will be seen by January 20th, which will be real results, which I'm expecting the 515,000 cars, 12 gigawatts of energy. It's still just late, but I expect the lumpiness to be positive for the energies, and that would then be $1.2 billion of profit instead of 700 or 800 million. So you're getting extra 500 million, more Cybertruck sales, another 12,000. So again, another few hundred million of positive stuff. So then you would have a really, and Q4 is in general strong on car sales. So then you'll have, more of the energy growth story. The Shanghai factory will be done. They'll be starting to ramp line 1 in Q1. And there's a possibility of some really big news like FSD China to be approved, where China would say, okay, you can start selling FSD in China. And then there's rumors of a licensing deal, which actually you shared with me, that Geely and Shanghai Automotive were in talks with Tesla, which those approvals alone would send the stock over all-time highs to 450.
I love it. Yeah, so I can see here that your estimate of 450, though, from let's say today it's 330 and it's going to go to 450. That's a pretty big jump. The sentiment, the cars, I love this. This is all true. I think this is pretty accurate. Even the margin, I think, was good. Shanghai Megapack Factory, I actually agree with you. I have a feeling that the rumors on the ground now is that they're 70% complete a month ago. And so there's a really good chance they're going to complete this by the end of this year. So that I get. The China approval and licensing, though, that one's a bit of a stretch. That could happen in the first quarter of next year versus it by January.
Right. And I'm not depending upon that one. I'm just saying it could happen, but I'm not depending upon that for 450. The 450 is just cars, margin, good energy numbers, like basically having a super solid Q4. And then January 20th, we'll have guidance for the full year. So in the earnings call, they'll say, hopefully, 2.4 million cars, 2.5 million cars. They'll say several things about what they expect for the year, which goes into the things that I expect for the year that will be in 2025 milestones. So they'll discuss some of it, and we'll get analysts thinking about 2025 in a major way on the January 20th.
Yeah, so January 20th earnings call, you think is going to be pretty good. And, even if you're okay with them just saying what they already said, 20%, 20 to 30% growth in 2025, even just that alone, things that they've already said you think is good enough to get the stock to jump by February 5th.
Right.
Okay. And then earnings hasn't really shown except for margins. Or were you expecting a certain earnings growth to happen?
I'm expecting some earnings growth. One, more cars, like getting 30,000, 40,000 more cars. In particular, quite a few of them being Cybertrucks, which are twice the per unit cost of a Model Y. And then the energy, we already know to be 30% margin. That if we come in with a 1.2 billion, it'd be like you'd have $1 billion more. So instead of like $2.5 billion net income, you'd have 3.5. It would be, solid growth. So you have margins over 20%. So several psychological things. Cars over 500K and margins over 20%, which I'm expecting to be like 22%, 21%, something like that. But just those psychological points of, because it was a big psychological blow to drop below 20% on margin and then not having car growth. So those two things of growth with strong margins would make the analysts very happy.
Okay. So 450, though, is a big jump. So you think that we got to 350, now it's a little bit below that, because of the $100 explanation you gave, just this narrative change. But from 350 to 450, that's another $100 jump.
Right.
And you're just thinking just because of good, these things building up.
Well, the other thing is that
I still feel like
on a technical analysis basis, we only have like back when we were in the 200s, there was like a
Yeah.
technical level like every $5-10. Now that
Yeah.
we're back up, there's if we push over 365, it's
Yeah,
like
that's
it'll
the
just
number.
move to 395. That's the next level. And then
Yeah.
the 395 for all-time high is kind of its
Yeah.
own little band. And then so it's basically like punch through two technical levels and you're at 450.
I agree with you. I mean, when I interviewed Mark Newton of Fundstrat, he's a technical analyst. Right. He's been predicting numbers quite well. He did say that 365, 366, 367 was a resistance level. That's what we saw. He does think that we will hit your numbers that you're giving, but not January. It would be like, several months into it. So we'll see. Mm-hmm. So let's go through some of your numbers here. We'll start with Q3 2024. We'll go to 2025, all the different milestones. Yeah. Tell me what we're looking up here.
So Q3 was basically the perfect quarter. So for people who don't know, we got back to 19.8% margin on auto, which is a huge number. There's the haters or analysts will say, oh, there's too much regulatory credits in there, the $800 million in credits. So without reg credits, you're down to 18% or something like that. So there's some issues with the number, but still, again, psychologically, we're just on the doorstep of 20%. And with a few more cars, a few more energy, we will punch through 20%. And we also, some of this came from the layoffs we made in the first half of the year, where that increased margins by 2%. And also the Cybertrucks, the factory ramp up was suppressing margins, which again has gone away. And then we were over 30% on the energy mega packs. The cash is very good. We had huge cash flow in the Q3. And then Elon said car growth is back for 2025 and 2026. 23%, 2025, the 2 million potential robotaxi in 2026. So the main reason we went down so far as we did was because we fell through 20% auto margin, and there was no car volume growth between 2023 and 2024. Both had 1.8 million cars roughly. So now that we're back to growth, back to margins, that should have run the stock already at the Q3, but it was delayed effect because of the suppression of the stock. And then Elon has said energy could triple. He says that, but analysts ignore it completely. They did not put the line item of here's energy. It's just shy of $1 billion a quarter. It's going to have this huge growth from tripling the factory. And then it'll have continued growth, doubling and tripling for the next several years. And they don't put that into their models at all.
I like the way you did this. Very good summary. Very well done.
Thank you.
Okay.
And this was the specifics of those numbers from the Q3 report. Again, the most important line being the pink one, where they have the various margin numbers, the 19.8 on the sixth line, what you're pointing at, and then operating expenses, just EBITDA, and then the net income at the $2.5 billion. So again, the total for 4 quarters has been about $9 billion, where you go back for, add the 4 quarters up. And that's been roughly the same when you take out some one-time charges. So 2023 and 2024 were both about $8 to $9 billion of total net income. So if my projection is that we could go to $30 billion of net income in 2025, or at least 25, then we're talking about a doubling and tripling of that net income, right?
Okay, so that's a big statement right there. Right. That's the one that you're estimating, and that's why you feel pretty strongly that others will catch on to that by January.
Right.
Okay.
Well, based on my calculation, then I'm saying, as some other people are, that we go to $1,000. I'm saying by the middle of the year, that Q3, either beginning or end of Q3, we go to like $1,000 because this is where they said by the middle of next year we will have FSD safer than human. Yeah. Right. So I'm then saying that happening, and they're very predictable on that now, that Tesla AI can predict very closely when these levels are achieved, then the robotaxi story in earnest in California and Texas will be in Q3. And
Yes.
if I'm slightly optimistic, maybe it goes to Q4, but still before the end of 2025 is there. So
Yes.
though, that would supercharge FSD revenue from $340 million Q3 based on the 10K up to, in China, in Europe, more attachment rate. That could easily 6x from $350 million. So then you're looking at $2 billion of FSD income by the middle of next year. So that would shift the story of that ARK Invest story of robotaxi, of FSD. We don't believe it's not significant. And it's if it's $2 billion, not far from the $2.5 billion of our entire company in Q3.
Okay, I love it. So this part, okay, the $1,000, it sounds like a huge jump, because it's a huge jump. But at the same time, what you've explained, which is absolutely true, right? You've got the robotaxi pilots. They're actually going to be running. They're not pilots. These are real. If it's done the way that they announced that it would be, you'll charge for these cars. And the way that Tesla's talking about it doesn't sound like it's just going to be, like Waymo does it with 70 cars.
Yeah.
This is, or 700 cars. This is going to be thousands upon thousands of cars charging for robotaxi rides. And then if they do hit the milestone of safer than a human, and then they can show it and prove it, and everybody feels comfortable that, that there's that leap, it's got to go 10 times better in FSD. So if all of these things happen, like you say, we're on our way. So yeah, tell me about this. This is basically what you're saying here.
Yeah.
FSD better than human, mid-2025.
Yeah.
V13.3, which is the one that's going to go wide.
Yeah.
November, December this year.
Right.
That's 20. Oh wait.
Yeah, this year.
That's 2024.
2024.
Okay.
Yeah.
4 megapack lines ramp.
Yeah.
New factories. So
So the 4 megapack lines are in the Shanghai factory. So there's 2 megapack lines in
additional,
Lathrup, and then 4 additional megapack lines from the Shanghai factory.
Additional.
And then some announcement of new megapack factories to be built
for sure
during the year. And the thing is, the megapack factories, according to the Master Plan Part 3. In Master Plan Part 3, there's a little table that says, here's how much our fixed energy storage megapack factories cost in a crude number. That was $10 million per gigawatt hour per year. So that means for the 80 gigawatt hour Shanghai factory, that's $800 million to build the factory, while the Lathrop factory only cost $400 million. And these factories take about less than a year to build, right? Let's if we were saying, a full year to build the megapack. But that $1 billion or $800 million is less than 2 months of profits from these factories, because they're making $2 billion a quarter, when they're fully ramping the 80 gigawatt hour factory. So if the demand is unlimited because of AI data centers, and also for all the solar farms, terawatt hours of solar farms, there's room to add. In Master Plan Part 3, they talked about 60 megapack factories in the world. Maybe not all Tesla, but that was before they pulled in the AI story. The AI story makes that 2 times, 4 times, 10 times bigger. So that's the virtually unlimited energy story in there, which, when analysts realize the AI story is an energy story, and the energy story is solar and batteries, right?
Yes.
That will, again, they won't fully realize in 2025, but they will start realizing how big the megapacks are. And then item number 4 is, right now, the FSD take rate, according to Matt Smith, is about 12% in the United States only. Because you get a far better, 13.3 version, and then getting to far closer to human and then eventually better than human, getting to 25% FSD adoption rate on the 9.5 million cars on the roads in worldwide next year, that would be 2.4 million FSD sales or subscriptions, which is about 2 million more than we have now. So 2 million more FSD, each one doing about $8,000, is like you had the profit from 2 million extra cars. So the FSD story of being roughly equal to the profit of a car is the profit of FSD. So every additional FSD sale is the profit of a car. So if we have huge amounts of FSD sales, 2 million, 1 million, whatever, you think of like, instead of making 2.5 million cars, I made 2.5 million cars and the equivalent of another million cars or 2 million cars because of FSD profits.
Okay, I love the way that you just explained that because few people understand that. That's fantastic. So that's why you think that if this FSD is better than a human mid-2025, not only will we have those pilots, those programs, paid programs already launched, but you'll also now get lots of people buying FSD.
Right, that's right.
Yeah.
And then on the car side, we expect a refreshed Model Y, a new car announced first half of next year. Those things will be announced. And I'm always hopeful that maybe it will be in Q1, but I'm not expecting it. It's I'm 50-50 that happens by March is my gut feel. One or two of those things. But they've in the quarterly statement in the earnings call, they said first half of next year. So.
Okay, so this is why you think, again, in addition to the $450 by February of 2025, you're saying $1,000 by the end of 2025.
Right.
That is brilliant. Okay, so I see this now. It's interesting you laid this out because most people I've been talking to are saying that 2026 is the big year. Okay, that's the year where lots of things happen because yes, the new cars will be introduced in 25, but it's going to take time for that to scale. And then same thing with the FSD, it will take till 2026 for that to scale. You're actually, people are going, okay, yes, it's going to, everybody agrees it's going to be 2026, but then when do you get ahead of it?
Right.
And I'm still not yet ready to say 1,000 by the end of the year, but I can see why you would say that.
Right.
Yeah.
Right. And for me, it's like, I still think 2026 is also going to be a great year and it's going to keep rolling on, but it's basically, I view it as Tesla goes fully like what NVIDIA did, where basically they did like a 10x over 2 years, right? That we're in that. It may take us 3 years because of the whole, we're building more difficult things. There's other stuff going on, but the many lines of energy becoming, a highly profitable thing that can keep, driving to huge numbers. There's multiple things that are going on that all seem to be converging based on the timing of things where it's all kind of coming together.
So the only thing I would say is that your 2025 explanation of why you think the stock will go to 1,000, it still is not the earnings. Earnings don't show up except for your explanation of FSD take rates. That is something that can impact earnings, but not, almost all the other earnings will not happen until 2026. And that's why NVIDIA skyrocketed is once they started showing a surprise quarter, and then they pulled it off again, and then they're showing that this exponential curve in earnings.
I think my next slide may discuss the earnings. Okay, earnings 2025.
Okay.
So I think that energy, because energy right now, the Q3 and Q2 had about $800 million of profit, right? Gross profit that was from Megapacks. So I'm saying if you triple that, then we're at $2 to $3 billion per quarter. If you're saying it happens, I'm saying it would probably happen, line 1, line 2, line 3, line 4. And then there could be a 3-month delay on it because you have to install them to recognize the revenue. So basically then Q2, you could expect an additional $500 million of profit. Q3, you'd be another 500 million, so $1 billion 5. So we'd have an extra $3 billion of profit from energy in 2025. but the run rate in Q4 would be 1.5. It'd be $2.5 billion. Our Q3 net income of 2.5 billion would be equal by energy alone in Q4. I'm saying that would happen as we ramped up the lines in Shanghai, and also fully recognize a lot more of the revenue.
Equal to auto, or what were you going to say there? Equal to
the net income of the company, entire company
today, which is auto. Yeah. So you're saying this is the statement that I've been trying to nail people down, but you're saying by fourth quarter next year, you're going to basically see the energy profit to be equal to what we're seeing now today in auto today, this quarter.
Right.
That's a big statement because I had assumed it was not till 2026. I knew that number, but fourth quarter would be the run rate, you're saying, right?
Right. Fourth quarter would be the run rate. There's some issues around how I'm assuming the 3 months is enough. Like Q1, you make it. By end of Q2, you've installed them and you recognize the revenue, so that you recognize revenue in Q2 for what you built in Q1. That's far faster than the California laser factory, because China will install the megapacks faster, right?
Yeah. It's going to be China.
They'll take them out, they'll run them up to Mongolia and Tibet, and they'll plop them down and they'll hook them up and they'll be recognizing revenue right away. So that's what I'm saying on that. And then the cars, I'm expecting, there should be, if you're going to make an extra 500,000 cars, then you're looking at an extra, 500, 600,000 cars. You're looking at 100 to 150,000 cars in each of the quarters. So, by Q2, instead of talking about 515,000 cars, you could be talking about 650, 700,000 cars in Q2. Mm-hmm. And it could be an additional, you could be at 50,000 Cybertrucks by then, right? Per each quarter, right? So based on that, I'm expecting an additional $1 billion to $2 billion from car profits, in Q2, Q3, or Q4. And then the FSD could come very quickly, because the 2 million cars that are currently in China, they would suddenly have, once they're fully regulatorily approved, they would suddenly have the opportunity to adopt FSD. And the first FSD they're going to see is 13.3, right? Mm-hmm. So it's like, holy crap! It does everything. It does reverse. It's parking, it's summoning, and then they'll say, okay, I want that. It'd be like, the adoption rate from the pent up demand in China, could be very like 500,000, 1 million possibly. That they could.
Well, 500,000, 25%, 1 million would be 50% uptake, which is a little too much of a jump. But 25%, I can believe in.
That would be, again, a super bullish case. Would it be one? You would be adding in another
450,000 cars.
Well, adding more cars in, right? So the production rate, the China production rate could go to 300,000. So 200 million existing cars, adding 300,000 cars every quarter, or 400,000 cars every quarter to China. And then the Chinese buyers are the richest buyers, because, they are richer, and the China buys half of the luxury goods in the world. All the LV bags, all that kind of stuff, half of all luxury goods. So this is viewed as a luxury thing. And according to Frida Duan, she says they're super eager to adopt driver assist, according to Frida Duan. So yes, if I'm conservative, but I'm not. If I'm conservative, I would say 25%, right? Mm-hmm. But I'm just for China. For China, they could go higher. Probably not 50%, as you're saying, 35%. But anyway, 25% is still pretty confident for all of China that they'll do that. And it would be, 500,000 that could drop in a quarter, maybe even 600,000, because of the old and new cars. Anyway, so that gets to $2 billion per quarter that you could get from FSD Robotaxi, in China worldwide. And when they put those figures into the earnings report as material, then it wouldn't be me guessing and Matt Smith flipping through a 10K. It would be on the page, them telling us, here's how much. And then at some point in 2025, they would put it into the volume. The volume is cars delivered and produced, the megapacks installed, and the number of FSD signups and sold. And so then it would be fully transformed into a robotics AI company, because you're not in your volume thing. You're not saying, here's some cars and here's a little bit of energy. It's like cars, energy, and my AI FSD thing is in my earnings report, my deck, and also in my volume number, which can then move the PE of the stock. Because if the AI story is there, AI companies or electronic companies have 80 to 120 PEs without anyone blinking, right? They'll say, oh, yeah, that's... Counter to that is the disbelief PTSD problem that Tesla has, where because we've been down for 2-3 years, just like NVIDIA has the earnings growing and growing, people are still shy of giving NVIDIA its full due because they're concerned that's going to stop. It's somehow not going to get. So there'll be some disbelief problem that'll continue. They'll see it. So the belief is, okay, I see the number. I see you guiding me to the growth. I'm concerned that somehow something, things stop working. And so I don't want to trust it yet. So there'll be some resistance to the PE growth from that.
Okay. I love it. You're very specific about your belief. So if anybody doesn't believe what he's saying, if it sounds too crazy for you, $1,000 by the end of this year, he laid it out for you. And now some of his numbers may be a little bit higher than you'd expect, but still some of this you can't ignore. This is actually correct. The things you're saying about, the additional energy, additional cars, additional FSD robotaxi, if the things that Tesla is projecting is happening. And so far we kind of are seeing that it's likely going to happen based on the targets that they've set.
Right. So if I was to be more bearish on it, more conservative, you could say, okay, 1 billion, 1.5 billion from energy instead of 2 to 3. I could dial back cars to 1 billion. I could dial back FSD to 1 billion. So then you're still up 4 or 5 billion. For each quarter. So then you'd end up with still a double of earnings.
A double of earnings of what we got now. So at the very least, the price should be double what it is today.
That's right.
So maybe it's $350, maybe it's $700.
Right.
Or if you're right about the $450 at the beginning of the year, then that's where you get your $1,000.
Right. Yeah. And then, like the things like if somehow there's a recession, then
of course,
the overall market goes down. And so then, you pull off 20-30%, off of what's happening because of some slowdown. So there's a lot of,
What's important? What's important? What you're saying though is that most of us, including me, was thinking that earnings won't show up until 2026. What you're showing me here is that there's going to be a lot of earnings that might show up already in the second half of 2025. You had a lot of caveats, like the 1/4 of an energy sale turns into earnings. But this is very interesting. Mm-hmm.
Okay.
And then the robotaxi thing, I think, is a little bit aggressive here. You've got second half of 2025. You're actually thinking 1 million in California and Texas.
Right.
That's a lot. That's a lot more than I think we would see.
The Tesla owners, like I think Tesla has about 1.5 million there. So it's basically like if you sign up to the app, then it's not dedicated robotaxi. It's an Uber, Airbnb type thing where people are doing it. And there's maybe like 100,000 dedicated robotaxis from Tesla, right? So it would be like counting how many Uber drivers there are to get to that number.
But still robotaxi, right? It's still robotaxi, not supervised.
Right.
But you still think in total, if all the Tesla owners, a certain percentage of Tesla owners put it in, you're still thinking 1 million cars. And that seems like a lot.
Yes, it is. So I'm just saying potential is there if things go crazy. If I was to say, I want to make something that's more definitely achievable, then you could say 300,000. You know, one thing is that Tesla is already giving rides to its employees in California, in Fremont, and and they're going to look to do something in Palo Alto for public, and then they're also going to do their Texas thing. So there's like 30,000 employees in Texas. There's like 20,000 employees in California. So if you did all of them, you know, with 20,000 cars, then you're looking at, just on the commuting, you'd be looking at the 100,000, 150,000 from that Uber does per week for their business, just for Tesla employees. So, and then if you say do 5 times that, in terms of like more rides, more cars for an open public offering, you can easily get to 5-10 times what Uber's doing, like 1.5 million rides per week from a limited California and Texas thing, just because the ease of getting to scale is so much from that.
Yeah, I can see the ease to get to scale, but not sure yet. I can say that second half of next year, even if they hit their milestone of safer than a human, as safe as a human in the middle half, even if they launch those programs, I think there's going to be slower uptake, slower growth, and then 2026 is when we'll expect it to balloon. But it's possible. I mean, it's very possible, right? Because know Elon, he's already going full force. He's saying we're doing it, and so you just turn a switch, right? Remember, he's talked about that a lot. I turn a switch, and all of a sudden they're all there. So maybe I am totally, just being, like you said, the PTSD of the last several years, just a little bit.
I know.
Not as bullish as I could be.
Yeah, like I was super bullish on it, and we're 2-3 years late on a lot of things. Like I would have thought, no way 4680s would not be ramped to like 50 gigawatt hours now, and it's way less, right? And so there were certain things that we thought, well, that can't happen, right? Be that slow, and they were that slow. On the other hand, if someone was predicting how fast the first China Model 3 and Model Y ramps would be based upon, the Fremont ramp, then you would have been very surprised, because it's like it did ramp far faster. So it's the kind of thing where if execution's back, then things happen. But if we have the last 2-3 years of execution, then things would go slower. You would say, okay, 2026, we need to give them time to do stuff.
I like that explanation. I actually believe it. So what you're saying, which makes sense, right, is that things are so slow. But the reason it was slow is that they need to, build their base. And then eventually when it actually works, it's going to go up. It's like, it's this whole point about they launched the Lathrop factory, then they launched, and then became, now it's at scale. Then they're going to launch the Gigafactory in Mexico. The Megapack factory in Shanghai. And that is like only 9 months. Right. So, and now because they know already how to do this. And so for them to then, manufacture, they're going to hit these records all of a sudden way more faster than any of us are thinking. Everything applies for everything else we're talking about too. That they're already there. Like 4680 batteries took us forever. And then all of a sudden, boom, 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 because they figured it out. They already know what they're doing. Scale is the game for Tesla.
That's right.
I love this show. Fantastic. I like that you stick your neck out, Brian, and you're throwing out this number of $450 by February 5th, 90 days from now, around that. And then you're saying $1,000 by the end of next year. And you gave your, I love that you actually worked out the earnings, because if you didn't do that, it's just a totally different show. You're just basically narrative still. And, but this is, you calculated some numbers, and it should show up by the second half of next year. That's a surprise to me. Yeah.
Okay. Glad to tell you about it. Glad you're able to enjoy it.
Oh, I love it very much. And I'm sure the audience will love it too. Appreciate the work you do. Follow Brian on his website, nextbigfuture.com. He's got a YouTube channel as well. Go there and watch his videos. Again, he does real original work that he always seems to be about 3 to 6 months ahead of most people. I love that you do that. Thank you, Brian.
Thank
you,
you,
everybody. Bye-bye.
Bye-bye.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.